Hey everybody, you're watching another episode of, Winston Sits in this one and talks the markets and economics. I'm actually at the airport, so I apologize for a lot of the background noise, but I'm here, waiting for my flight, so I thought I'd talk markets today because we had a big day. Chairman Powell in the U.S. cut 25 basis points on the interest rate. However, he did indicate that the U.S. economy is stronger than expected. Inflationary pressures are still prevalent, and he's forecasting less rate cuts in the future. So, as you can see here, I did a little little market update here. But at the end of the day, on December 18th, the S&P was down huge, almost 3%. The Nasdaq was down 3.56%, and the Russell was down 4.4%. And if you can see here, it all correlates with Powell's announcement. It's interesting because I'm going to bring in other assets here, and I'll show you. That goes to 1 year. That's no good. But here you get the 1 day. As you will see here, things just got trashed right at the end, which is 2 o'clock, which is when pretty much their announcement was the 25 beeps, and they're forecasting that they're going to be cutting less rates. It did try to make a comeback, but then it crashed as, in terms of his commentary. He's obviously taking in factors like, President Trump and President-elect Trump's forecasted when he comes back in, he's going to be demanding rate cuts. Let's be quite frank. He's going to be cutting regulation. He's going to be cutting taxes, which is very stimulative. So Powell is forecasting, those aspects. Now in terms of, let's take a look here at gold. Gold is generally a good indicator of, inflation expectations in the future. So again, this is the 1 year, and it's such a big difference. Again, same pattern, right? It just demonstrates to you how correlated interest rates and the stock market are. Because, look at that right there. Over time, though, gold obviously does benefit from the dollar devaluation. Inflation at 2% plus. But at least in the near term today, the expectations are that Powell's going to hold. He's going to hold, and rates will stay up higher. You can also take on the 10-year is the standard in the U.S. And that's holding up 4.52%. Let's get that 1 day here as well. So there you go. That's a perfect example of inflation. So really, these are inflation / interest rate expectations. So as you can see here, there is a serious rate jump. It's 13 basis points. 13 basis points just in the one afternoon is pretty big. So this is going to affect things like mortgages and lines of credit and all types of. So think of this as the base interest rate for what everything's loaned on, and that includes the Canadian market as well. So I know, I'm in Canada, and I know I have a lot of viewers. So right here, this is the. Oh, geez, sorry about that. This is the 1 day Canadian, the 5 year. So remember, a lot of our mortgages are 5 year fixed. Everyone takes besides the variable. Variable has been coming down with the Bank of Canada. Now, as you can see, again, 2 o'clock is the key. When Powell made his announcement, the Canadian yields jumped. This is your Canadian fixed bond rates are going to be going up based on the American central bank expectations. Even though Canada right now, our economy is in big trouble. We've got a lot of political problems. Liberal government's pretty much, on the brink of falling. We've got major deficits here. But you would think that with our economy slowing, you'd think the Canadian central bank would need to keep cutting rates, and our bond would reflect that, right? So this is the interest rate, remember. So as rates go up, the bond prices go down. So in this case right now, interest rates are actually going up, at least right now. For today, who knows, in a month, right? Supposedly our inflation rate came in at 1.9, which is below the 2%. However, there's a lot of commodities that are still holding up. So this is the 5-year Canadian bond yield. And then here, so sorry about that again. Come back. Okay. So this is the Canadian dollar versus the USD comparison. So that 1 year is not the greatest right now because of the time frame. But here's our 5-day. So this comparison is for every $1 US, it takes 1.4449 Canadian to purchase $1 US. And this is just the base rate. So when you're buying it, usually what happens is that whichever institution you're using, they're going to add on a service charge or some type of fee. So you're going to pay more than that. So you know what? Estimating it's going to be 147, 148 if you go to your local bank. Obviously they don't like to advertise that. They just give you the rate and people think that, but that's what it is. And you can't get away from it. It is what it is, right? But what this tells you is that the Canadian dollar weakening here against the US dollar because Jay Powell is expected not to do as many rate cuts, and he's said it, because he expects, again, Trump's going to cut taxes, going to deregulate, their economy's going to hold on stronger. Versus in Canada, we've got a weaker economy. They're expecting Tiff to do more cuts. He's saying he's going to have to do more cuts. Obviously, now with political strife, we're going to have even a weaker economy because, if you're an international company that wants to invest, why would you invest in a place that, you don't know which government's going to be in place, and there's just a lot of problems, right? So that's why right here, now we've got a weakening dollar, right? So the U.S. is obviously our biggest trading partner. Trump is also threatening those 25% tariffs as well. So that'll weaken Canadian companies. That's the outflow of currency as well. And keep in mind, interest rates in the U.S., when they're higher, money will flow to the higher paying treasury, right? So essentially, if you want to buy that treasury, let's say the U.S. Treasury, because you're going to get paid a higher interest rate, you need to buy U.S. dollars. So that's why the Canadian currency is actually weakening. And then also what that does is it imports inflation to us as well, because us buying a lot of our products from the U.S., we're actually going to be having to pay more now. When you go to your local Loblaws, and again, sorry folks who's not Canadian, I'm gonna just use some Canadian examples, but like at Loblaws or Sobeys or Farm Boy, Food Basics, wherever you shop, right? You're just gonna see those grocery prices just keep going up. And it's just based on the currency. It's not even about the demand factor. And obviously we've got an immigration imbalance right now. Plus our season's not exactly we're going to get hit with a lot of snow. So, produce and things like that are generally harder to come by. But that's a big problem as well. So, so that's the currency. What else I wanted to show you folks here? Um, so in terms of, I guess what this is saying right now, in terms of the initial information that I'm getting from the markets, is that with this sell-off, they're expecting the U.S. economy to not, they're expecting Powell not obviously not to be as to help as aggressively, but they're also expecting on the average that the market is going to be a lot softer in terms of performance. And a big factor is that Russell 2000. So this is the small caps, right? So it's there's a lot more smaller companies that'll reflect on the general U.S. economy. The S&P and the Nasdaq, you have some super large companies that tilt their index. Looking at Nvidia, etc., Microsoft, and Apple. So, this market's really, it's telling me at least today that, that's the case. And also, obviously, but you've got Trump, who markets, rightly or wrongly, they like him. However, I will say that in the trading in the last administration of Donald Trump, he'll put out the bad news initially, start trade wars, threaten things in the beginning. So don't be surprised if we get even more. And in Canada, we've got an issue where the Liberal Party is still in power. Justin Trudeau's still in power. We know that Trump doesn't like him. Apparently, when we come back, they come back and they resume their political operations. So I don't know the exact terms, but the proper terms. Trump is going to be I think it's the 27th. He's going to be in power, and then we may already have that 25% tariff placed on us. So if that's the case, this dollar is going to get trashed even more. When this isn't even the highs. This is the highs for a while, but we've had it where I believe when I was a lot younger, but we've had it where it was 1.6. I remember at one point. But this also affects housing as well. So just remember, with housing, we've got the mortgage cliff coming in 2025, 2026 when you renew. Just keep that in mind. I know a lot of people are talking about taking variable. Already fixed rates are moving up, so they're crossing each other now, variable and fixed. So just be careful. I'm not telling you one way or the other. Obviously, this is an advice. Just make sure you do your work, because you look at things like this is actually still the high of. This just tells you how weak our U.S. dollar, Canadian loonie is. It doesn't even go far back. Well, we're getting to the top there, so if it breaks through, good luck to us, right? Which it may well be. Pierre Poilievre comes into power. Like I mentioned, he may have the thought pattern of lower house prices are great for overall Canada society. And I'm gonna let people argue with it one way or the other, but if you're someone who is banking on that high real estate prices continuing, that's just something you may want to think about, right? Rates going up, house prices will go down. So just keep that in mind. And like I mentioned, I'm going to show you this 5-year. Oh, come on. Maybe that's the, rates were higher, but okay, so rates were higher, and they're heading back up now. So just be careful. Another thing you may want to be careful of is watching out if stagflation starts to appear in Canada, and frankly, I kind of see it in a way. Stagflation is stagnant growth, but there's inflation. So right now, our economy is poor, but things you got to watch out for are energy prices, which act as an informal tax on the consumer. So these are kind of the mosaics that I use when I'm thinking about my investment thesis on what I want to do, right? Um, Obviously, still be balanced in things, but sometimes when you want to make a little bit of a tilt on something, so if you look at oil prices, you know, they're generally held up. Granted, Donald Trump wants to lower this because he knows that this is if energy prices go down, they basically become a informal stimulus to the economy, which is another reason why I think Powell is being cautious as well, because he knows that that could light a fire and create a lot of inflation as well. So that's another thing. But just keep that in mind, when you're making your assessments on your judgments on in terms of mortgage renewals and things like that, or if you want to buy a place, how much you want to spend. It's not a foregone conclusion that the Bank of Canada cuts and lower rates are coming. All right, so just keep that in mind. Not sure if this helps you guys or if you guys like this type of talk. Again, I'm in an airport, so I just wanted to show some of this stuff today. Hope everyone has a wonderful holiday. My name is Winston. I usually take walks, but I'm in an airport and I'm just sitting. So I thought I'd do a bit of analysis in terms of today's rate cut and market. Well, it was a pretty big beating today. There have been worse beatings, but and then it also shows interesting correlations between things you could look at in terms of the markets, bond, different markets, commodity markets, equity markets, bond markets, interest rates, how they relate to with housing. Because housing, obviously, you don't always see the prices every day, but frankly, this kind of shows you that if they were pricing housing every day like they put it on a stock market, today housing went down, right? Frankly, so. Anyways, thanks for listening to me today. I really appreciate it. Hope everyone has an amazing, wonderful holiday. And got more stuff coming. We'll have an amazing Christmas. Hope everyone is healthy and happy. And I will see you in the next walk/video. And see you then. Bye-bye.